Welcome to Trading Lounge and the US Indices for the 11th of August. Today I want to start with the NASDAQ here. As you may know, we've been tracking a wave 3, A, B and C for wave 4 here, and then up for 1 here, an A and a B and a C for wave 2 here, and then climbing up to wave 3 here. In 5 waves. Not the best looking structure within this. Some of it's easy to read, some of it's not. But wave 4 is here. Now this particular move down through here, when you first look at that, you would look at it as a 5-wave structure, and it certainly could be. And if that is the case, then we would see more price action come in for that wave 4, such as an A wave, a B wave and a C wave. Maybe touching supply up at here, but 61.8%, and then another 5 waves down through here for this, and then a move up from that point. But when I look at this on the cash market, if I can just bring the cash market up on a 5-minute chart here, this is the pattern here for this. So if we could just go over that for a minute, we've got 1 and 2 and 3 and 4 and 5 here for wave 1 here, and wave 2, and wave 3 is nice and strong and long, and wave 4 and wave 5. So we'll need to look at this as a corrective move here, and then another move down here. So it does count down actually as an A wave, a B wave and a C wave on the cash market. And it does look rather impulsive starting off here. So yeah, it looks a little bit corrective rather than impulsive. So we can take that on board. The only issue I have with this is that this particular move down through here doesn't count very nicely as 5 waves. It counts down more like 3 waves, as an A and a B and a C there. It's a little bit hard to see this, but if you look at it on a 1-minute chart, you'll see that it's just really got 3 waves down here. So we need to be a little bit careful with the move going up through here. Certainly we'd want to be looking to trade it up, because if it's correct, it will take us up to the next level here. Let's just say the medium level here, 500. But we know that the S&P 500 will be facing old highs at 3,400 and a bit of a gap there and so on. But I imagine when we've got our levels here, this is not quite sitting on 100 here, so we're just going to move that a little bit. So if that's 11,100 there, if you can get a nice, like currently it's not support, is it? It's banging its head against supply over here. Supply just means sellers, and it's not sitting on there as support. So if it's going to fail, that's where it's going to fail from. So having the 100 as support would be a nice move forward. It has pulled back, you know, to if we took it wave 2 here to wave 3 here, the 38.2% retracement level is here. It's already breached that. That's okay. It's sitting, you know, on 11,000. So you've got those 2 points there. So a stop, if this pulls back here, that would also be a nice place to get in as well. So up for 1 here, back for 2 here. And what that will do is it will give you a closer place to put the stop under here for this. But we do need to be a little bit mindful. So it's very clear here that it's 5 waves here. So we'll just see how that plays out. But let's move on to the S&P 500. So with the S&P 500, as you may know, we've got the top over here at 3,400. There's a little gap here on the cash that people have been noting, and we're still in an uptrend. You know, that's the main point here. We can expect to see profit taking come in at the 3,400 or close to it here, and then see a correction here. So the count to the upside here, I know that this can be counted in different ways here, but this is how I've got it so far. But I think the main point here is that we can expect a correction at the 34, and we need to trade to that. We've got long trades in. We'll trade to that point, get out, and then just wait and let the, you know, don't have to be in the market all the time, and just allow the market to correct until we can pick it up and we understand what type of pattern it is. Is it impulsive further to the downside? Is it corrective and it's going to be pushing up from that point? So we'll need to assess that. This particular pattern through here as well is a little bit of a headache as well, because if I take it from here, then I can look at this as 1 and 2 and 3 and 4 and 5 going up here. But if we use this as wave 4 here, then we'll need to look at this as wave 1 and 2. It'll throw an extra wave in. So if, let's just say, all of this is all 5 waves going up to the 34 here, and if that was going to correct here, if we needed to include this one here, we would need to take the low of this wave 2 here and then put that at 34. That means that we would have a move down into the 38.2% retracement level, thereabouts, and then we would have another move to the upside here, pretty much the same length as well. Wave 1, because the extension's in wave 3. So we just need to be a little bit mindful of that. So that's what we need to navigate this one here. It will only give us another buying opportunity, and if it's going to be this wave 4 here, then we need to bring this down here for that. So I might just copy that there and put that there, and that would be that degree of wave 4 sitting there. So I think that's so it's just something we have to work through. You know, I wish I had a clear answer for you, but I don't want to throw myself onto the chopping block for no reason. It's not going to do anybody any good. The other thing here I noticed too is that this, if I take the length of wave 1 here, then a lot of these trends are the same size. So if I take it to the low here of wave 2 here, then it takes us into the top of wave 1 here. So it's the same length there. And then I need to take it from this wave 2 here to take it to this wave 3 here, and the same here as well. If I took it from here, then from this low, then that would take us up to 3,453. Okay. And if I took it from this low here, that's going to take us to the 34 here. So I think it was just kind of interesting that all of these legs are pretty much exactly the same distance there. So it's just a way of looking for the two target areas up here for that. But yeah, so once we hit 34, we'll either come back to this point and then go up, or we're going to be coming down to wave 4 here and then going back up. And I've got a lot of stocks that are in 3 to 4, so that's why I've got this labeled like this here. But let's go in and have a little look at this particular structure here for a moment. So picking it up from here, I've been over this before, but it doesn't hurt to go over it again. So we've got wave 1 here and 2 here, and then wave 3 here. This wave 3 is a little tad longer than wave 1, so that's sort of okay. I know I can count that differently, but I'll just stay with this, because this is the most conservative viewpoint of them all. So this will just get us to where we need to get to, the old high, and yeah, so yeah, an A and a B and a C for wave 4 here, and then from here we've got wave 1 and 2 here, and then I'm looking at 3 and 4 in here. We'll take a closer look at this, and then we're looking for another little move to take us higher here for this. Now, as I mentioned, we could, once it reacts from here, we may need to use this wave 1 and 2 here, and then look at all of this move up here as this wave 3 here, and then look for, copy that as, you know, and look for wave 4 here for this. It's just something that we need to work through. And then up from that point there again. The other point that I want to make too is, you know, at the 3400 here, when we look at the daily chart again here, you know, double tops are never the end of the trend. Okay, the reaction here, you know, it may give us a clean double top here with a bigger pullback for wave 4 and things like that, but at the same time, the double tops are never the the end of the session. Do you know what I mean? So we just need to navigate that, and we'll be up again. That's what we're looking for here. So I think the 34 is a really nice place to end the trade. So just going back to the 4-hour chart, sorry about going down that side street, and yeah, let's go and work this. The other thing I wanted to say here too, it's also possible to copy this here, to put wave 1 here and have an A and a B and a C here for wave 2 sitting here, which will also give us another little leg in the game. And I've got wave 3 and 4 here, but I have to say I'm not that happy with it because it's rather small. So that creates a bit of a problem, but it's all about making money. So let's go in a bit closer and look at this. So we've got a long trade on down here. And I'll just open this up. I know it's messy. And I'm bringing the stop from, well, yesterday we had it under this wave 4. I'm bringing it up to under this little leg here now. And yeah, this is my wave 4 that I was talking about, which is a bit small. It's okay. It's bigger than the previous wave 4. So I'm okay with that. And this one here, I really need to investigate this little structure a little bit more here. I haven't really pulled that apart. I've just assumed, which is, as we know, dangerous. But it, it's got that sharp ABC here for that, so that should be okay. We don't want to see that breached at this particular point in time, and we should see this move up a little bit. It looks like we've got wave 1 up through here, so it may pull back to the 50-60% mark into the 3350 here for that, so just be a little bit mindful of that. Apart from that, we should push up into group 2 here, 65, 72 and 80, and then we should see a series of corrections across there. We know the market is creeping to the upside, and we also, it will also be nice to see the NASI push up from this low as well, getting support on the 100 here. Not that the S&P needs to go with the NASDAQ, but it's nice if they go to the party together. So just keep an eye on that. But once this market grips into this number here, the 65, 72 and 80 that make up group 2, once it claws its way in here and gets support there, that gives you a little glimmer of light and hope that it's going to stay there and then climb up through these other levels here for this. And once we get support on the 72 here, well, then we can look at the 34. But because we've got the old high there and the gap and a few things going on, markets have memories. Well, people have memories, which is more to the point. If you've got a football team that hasn't won for 40, 50, 30 years or something like that, and it's in the final, that all that memory comes flushing back. So it's real, it's there, and we need to be cautious. So our job is really just to trade to the 34 if we can get that far and get out, and we'll just chill out, and then we'll just allow the market to do what it needs to do. And if we can see anything, great, we'll take action, but otherwise we're looking to rest at that level. Alrighty, thanks for tuning in and appreciate the support. Cheers.